Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Most people are going to borrow money to buy rental properties, but not everybody is comfortable taking on a lot of debt. Jake, how do you feel about debt?
I think using leverage debt is very important in the beginning with investing in real estate. But my wife was always been more debt averse than I have been. So we've worked together with our portfolio over time to kind of come up with a compromise. I think it's really been helpful for us. We utilize debt in quite a few ways, not as much these days as we used to, but it's worked out well for us. And we currently only have of our entire portfolio, only about 25% debt left on it. That number has come down. A
lot of times when you have one spouse that isn't comfortable with taking out mortgages, they end up just not investing in rental properties. And I think it's great that Jake and his wife were able to figure out a compromise and figure out an investment strategy that they were both comfortable with. And in the process of this, Jake has ended up paying off 75% of his rental portfolio. On the podcast today, we're going to talk about the 3 strategies that Jake has used to pay things down and pay things off. Joining us on the show today from Grand Rapids, Michigan is Jake Thomas. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Jake. If you're looking for a quick and easy way to finance a rental property, reach out to Chaley Ridge from Ridge Lending Group. She has a loan program where she only cares about your deal. She doesn't need to see your pay stubs, your bank statements, or your tax returns. The only thing she's going to look at is the deal. She wants to know, does the property cash flow? If it does, she'll give you a 30-year fixed rate mortgage. Now, the rates are going to be a little bit higher than a full doc loan, but it's still a great deal. She can close quickly and there's no hassle. If you want to learn more, reach out to Chaley personally at ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. For a limited time, mention Rental Income Podcast and get a $250 credit at closing.
Rental Income Podcast.
Jake, let's start off talking about your portfolio. Can you tell me what your portfolio looks like?
We currently have 22 units. It's a mixture of multifamilies and single families and short-term rentals. It's mostly duplexes, and the multifamilies are mostly duplexes, and there's 1 5-unit. Those are in like the inner city in Grand Rapids. They're in B- B type areas, and then the single families are in a suburb of Grand Rapids, in a town that I don't live too far from. They're about a mile away from my house. And those are all in like an A- type area. So
it sounds like you've got a real diversified portfolio.
Yes. Yeah. We try not to have just one type of property. We don't want to pigeonhole ourselves into it, but it's good to have a mixture, because then as a realtor, it's also good to have a mixture, because then I can explain the different types of properties to the other investors, because not everybody wants to invest in single family, some want multifamily only, some want single family, some only want short-term rentals.
So would you say that, being that you've got different types of properties, would you say one of them is performing the best, or are they all good in different reasons?
They're all good in different reasons, but I have noticed when I first started, the multifamilies cash flowed the best, because it was, a duplex. It would just have one roof. The maintenance was a little bit less, but the single family rents have gone up so much that we're almost transitioning to more single families now.
Okay.
The rents have gone up 30-40% in the last 2-3 years. So people are paying it, and they're easier to manage. They're a lot easier to manage. There's less tenants, and they treat the houses like they're their own. They take care of the yards, landscaping. The multifamilies, not as much. So, and then I will say that I do believe that the short-term rentals perform the best. They are more work, but they do perform by far the best on a cash flow basis. So,
and how long have you been buying rentals for?
7 to 8 years.
Okay. And so you've really been focusing on getting your properties paid for. I'm really interested to hear more about this. So you were, I guess, when you were getting started, you were comfortable with that, but your wife wasn't. So was that kind of a stumbling block to get started buying rentals?
Yes. In the beginning, I was using only my own personal income before we were married. We were buying properties before we were married, but it was buying them like in my own name. So I got to a point where I think I could afford 3 mortgages on my income, and I maxed myself out. I did talk my wife into buying one rental on her income, and then we were married shortly after that. But it was tough to get her on board with all of that because she never really liked debt too much. She liked having things paid off, and it's less stressful. I mean, we've only been doing it for 7-8 years, but we used to have a lot more debt than we do now. But now it's a lot more manageable and comfortable for her. I mean, I think we could take on more, but she doesn't want to, and I'm okay with that. So
now it's always a kind of a tough decision to make when you have cash. Do you use that cash to pay down debt, or do you use that cash to grow your portfolio? So as someone that understands debt and understands how powerful it can be in wealth building, has that been a challenge to kind of balance that between paying down debt and also buying more properties?
Yes, it's definitely been a challenge to decide when you have cash, like what do you do with it? I always look to, hey, if we can find the right deal, I think we grow. But we're not as much in growth mode as we were 5-6 years ago. I mean, we were adding 3-4 properties a year. Now we might add 1 or 2, or trade 1 for 2, or trade 1 for 1. Then it was, I wanted to leverage because I wanted to buy as much as possible, get to a growth mode. But now our lives have changed. We have small children, and we're not getting any younger. So it's like maybe slow down a little bit. So that's, life happens. And once you have, kids, it's hard to grow a portfolio with little kids.
Yeah.
But that's kind of what's maybe slowed us down at the moment. I'm imagining we'll pick back up. Also, the market changed a little bit. But that's a different story.
Sure.
So.
All right. Now, there's 3 main strategies that you use to pay down the debt. And I want to walk through this real quick. So the first one is that you've just been paying extra on your mortgage. So tell me how you've been doing that.
We just pay anywhere from $200 to $500 per mortgage, extra a principal payment on top every month. It's just auto draft out of our account. I budget for it. I know exactly how much is going to leave the business account at the beginning of the month, and we've been doing it for years. So with our budget, we're just used to seeing it. So if you learn to live with, what you're budgeting for, you get used to it. You don't really think about it. It kind of just happens in the background, and you don't really pay attention to it. And you see your statement, and you're like, oh, there's an extra curtail payment on it. So,
are you paying that extra payment on all your mortgages, or do you focus on just one at a time?
It's kind of spread out between a few. We only have 4 or 5 mortgages currently.
Okay.
So I think there's maybe one that doesn't have a payment on it.
Yeah.
The only reason that one doesn't is because we're planning on selling it here in early next year for tax reasons. So there's no reason to pay down that one any further.
Right.
But the other ones these are properties we're planning on keeping for 30 plus years. So we're just paying down a little bit extra.
Okay. So every month you're just putting a little bit extra and just getting that mortgage paid down. The other thing that you do is you flip houses and you come into big chunks of money. And so when you get when you flip a house and get a big chunk of money, tell me what you're doing with that money.
If we don't immediately have a property that we're going to roll it into to flip again, instead of it sitting there for 3 months, we'll just take it and pay down a loan. If we have like a $60,000 mortgage, we'll just pay it off. So that way it's free and clear. So it's a good feeling to pay off a house. So.
Yeah. I mean, that's really, really incredible. So you've said you've got 20 something houses or 20 something properties.
Yeah, we have 22 units over 15 properties.
All right,
I believe
15 properties, and you've got 4 mortgages left.
Correct.
Right. That's really
Yep.
That's really awesome. Now, the most powerful thing that you've done to pay off your debt, or I guess to kind of trade up and buy more properties, has been your using the 1031 exchange. For anyone that isn't familiar with the 1031 exchange, why don't we start with you just explaining what that is?
So a 1031 exchange is, in real estate, you're able to trade for a like kind investment. So if the quick example is I had a single family house and we paid $50,000 for it. We sold it for $140,000 a year later. So we were able to exchange $90,000 of equity into the next property, free and clear. No, there's no taxes, no income taxes on that property, and we can do that indefinitely as many times as we want. So I'm not a CPA or anything, but that's a real simple explanation.
Yeah, okay,
but you're able to trade your equity up into a property. It doesn't have to be single family for single family. It can be a single family into a multifamily, or a multifamily into a commercial property. They have to be like kind. So real estate for real estate is what I understand.
So in that example, you have a $90,000 profit. If you had to pay taxes on it, you might lose $30,000, $40,000 in taxes, where you can take that $90,000, move it into a new property, and you're not paying any taxes on it right there. So you can buy more real estate by using the 1031 exchange. So let's talk about an example, because I think that you've got a really cool story here with how you ultimately ended up with a $800,000 lake house. Now, this all started with a $26,000 purchase. Kind of walk me through this.
My wife and I like to go driving for dollars, and something fun that we do. We just drive around, look for properties that look like they need work, write down the addresses, and we go research the owners and send them a letter or give them a call. So we found one that we ended up purchasing for $26,000, and we put about $50,000 into the remodel. So we're all in there for 76. We ended up selling it for about 150. So we had about $75,000 in equity there. So we exchanged the entire 150 sale price into another property that was for about 180. If I remember right. And then we put about 20,000 into that one. So that 200,000, we sold that one for 250. So that was property number 2 that we sold for 250. And now property number 3 is our lake house, and we purchased that ultimately for $275,000. So I just upped in a little bit of cash to get the purchase price up as well. And then so we're all in for $275 there. I put about $125,000 into a remodel on this lake house, and so we're all into lake house for about $400, and it is worth about $800,000 retail right now. And that is our number one short-term rental. It did about $75,000 in gross rent this year. Wow. And after taxes and maintenance and such, we profit about $60,000 in that property. And it all stemmed from a $26,000 purchase from driving for dollars.
Which is really incredible when you think that to buy an $800,000 lake house, you need a lot of money. I mean, to put a 20% down payment on an $800,000 house, plus maybe some money to fix it up or to get it ready. I mean, that's a significant amount of money. But the way that you did it is you started with a very cheap house. You traded up to a more expensive house, traded up again, and then you took all that profit you had made and you bought the lake house. And then, luckily the lake house has appreciated. But like that's really, really powerful. I mean, that really shows the power of real estate.
Yeah.
All right. So let's talk real quick about this property. So you said it brought in about $75,000 in revenue last year.
Yes.
And then your expenses, so there's no mortgage on it, but your taxes, insurance, any repairs, that was 15,000.
Yep. Property taxes are about 8 and then 7,000 in maintenance or so.
Okay.
Then your insurance is about 1,200 on there too. So I think I kind of wrapped it into the property tax number, but it's about $15,000 on annual expenses on that property. So
wow, incredible, $60,000 on one property. Now let's talk about how you're finding deals, because I think you've got some real unique ways that you're finding deals. Now, as a realtor, you're coming across people that want to list their house for sale. And when you find a client, you give them the option that, look, we can list your house on the MLS and you'll get this price, or I can buy the house from you at a lower price. Is that what you're doing? Like, did I explain that right?
Sort of. It's close. It's so, client will call us to, hey, we want to sell our house. We'll go over, meet with them. And not every house is a great fit to list on the MLS, because if you've all bought a house on MLS, it might need work, but the roof doesn't have a hole the size of a fridge in it, or, it doesn't have major foundational issues, things like that are going to become huge issues for a realtor trying to sell that property to a retail buyer. Some properties like that are just better fits to be sold off market for a cash sale. And if somebody has me over to their house, I always tell them, this is what your house is worth. But a lot of times, hey, you have to do all this work to get to that point, to be able to sell it for this. And a lot of times, there's houses that people inherit. They don't really want to deal with it. They just, okay, what would you buy it for? And I give them an offer. And if they choose to go that way, we'll close on the property and end up, remodeling it, keep it as a rental, or flip it. So, and this is something we do quite often. It's probably the best lead source that I do have other than my own network. So
give me an example. So for one of your recent deals, like what price could someone have gotten if they had listed it versus the price that you were going to offer?
The most recent one, I went in and I told them the property was worth retail about $120,000 as is. It needed quite a bit of work. It would be a tough sale at that. I ultimately, the seller really wanted to. It was a hoarder. It was her mom's house. She passed away. It was a hoarder house. It was 100% just full of stuff, like 10 dumpsters worth of stuff, and she had to deal with it all. And I was like, well, after you empty the house out, because you can't sell it with that much stuff in it,
right.
Nobody will take it on the retail market. And I gave her an offer of $8,000. We would clean it all out. Like I said, you can take whatever you want. You can any personal, family heirlooms you want, you can have it, but we'll take care of everything else. And we offered her 80, and she accepted. They had about a $30,000 remodel, and it's rented for I think $1,900 a month.
Wow!
Now. So
yeah,
that's the most recent example I have.
That's a great. That's really a win-win, where you had these people that really couldn't sell their house on the MLS. Like, yeah, maybe it's worth 120, but they were going to need to put a lot of time and effort into getting that price. Where you come in there, you give them an offer that's maybe a little bit low, but it's easy for them.
Yes, we try to make it easy like that. That's how I explain it to them. Like this is the easy. If you sell on the MLS, you got to empty it out. You got to do this. If somebody wants a loan, you got to go through inspection. You have to have an appraiser come through. It's just like step after. I mean, I saw a lot of houses as a realtor, and we go through all these steps, and they all could be, a roadblock. But when I offer a price cash, no inspections, it's easy, it's clean. Because selling a house is stressful. Mm-hmm. This is stressful for people that don't do it every day, right. And they just don't want to deal with it. Most people would buy. I don't have the stats in front of me that they might buy and sell one or two houses in their lifetime, and they just don't want to deal with it. just just give me a price, and okay, we'll take it. Yeah. So but that was a good situation. It took a lot. It took a lot to remove all that trash, but we got it done. So
if you're interested in buying rentals in Grand Rapids, or you just want to learn more about the market, I think Jake would be a great resource for you. I've got his contact information on the website. You can find it at rentalincomepodcast.com/episode 416. Thank you so much for checking out the podcast today. Make sure you hit that follow button. I put out a new interview every single Tuesday, and if you're following the show, you'll get notified as soon as the next episode comes out. My name is Dan Lane, and this has been the Rental Income Podcast.